This is the Scrap Metal and Commodities Recycling Report brought to you by BENLEE, Roll-Off and Open Top Trailers and Raleigh Goldsboro Metal Recycling, February 1st, 2016. In this report, last week price volatility continued and very good news continues for manufacturers buying commodities as prices remain low, which of course is bad news for recyclers as low prices bring low volumes in many cases. Steel production in the U.S. continued increasing after the 4 months of declines last year, but production actually remains well below last year's levels. Oil rigs, major steel users, continued their rapid decline in the U.S. There were more than 3 times the number of rigs in the U.S. just 15 months ago. Scrap steel prices remained up a bit. Last week we heard reports that some steel mills were not getting their orders filled, and while flows are better into steel yards, they remain severely depressed. With that, most think steel prices this week will remain steady or slightly up or slightly down. Hot rolled finished steel prices remain up a bit as well, but are being kept low due to the enormous amount of imports from overseas. Stainless scrap prices also stayed a bit higher, but they too have been relatively low. Copper moved up a bit last week, but came down a few cents in the past 10 hours for actually a major good reason. Earlier today, China released their January Manufacturing Purchasing Managers Index, known as PMI, which came in lower than forecast and shows yet another month of under 50. Anything under 50 means contraction. Related, the 5-year chart shows copper remains near about 7-year lows. Aluminum prices, like copper, came up a bit last week. Yet in reality, like copper, aluminum is near its 7-year low. Ending 2015 steel mill capacity utilization was at the lowest levels seen since the crash of 2008. Related, U.S. Steel released that they lost $1.5 billion last year, and their stock hit new 20-plus year lows. Steel Dynamics also released earnings, which had a very positive reaction by Wall Street, with an increase in their stock price, despite losing money for the quarter. Highlights were average steel prices were down $152 a ton and scrap prices were down $105 a ton. Also, due to the low performance of their recycling division, known as OmniSource, they took a $435 million write-down on its value. But as a major positive, the company finished the year with record liquidity. Excess shredder capacity in the Southeast was stated to be a key reason for their metal recycling losses. This is good news for sellers of scrap metal, due to this means recycling companies are paying top dollar in the Southeast region versus other parts of the United States. Nucor also released earnings. Their stock price also went up despite losing money. Highlights were steel prices in the fourth quarter were 18% lower than last year, and scrap substitutes were down $111 a ton this year versus 2014. Nucor said their raw materials group, including the recycling segment, had lower performance in the fourth quarter versus the third quarter, yet they too finished the year with a very strong liquidity position. Very importantly though, Nucor believes that anti-dumping and countervailing duties could go into effect in the first part of 2016, which will raise steel prices and raise U.S. steel production. In other industry news, Sims, the largest metal recycler in the world, had their West Coast JV, SA Recycling, purchase half of Newell Recycling. U.S. GDP was released showing the total economy has been growing, but growth has been slowing for the past 9 months. Yet this industrial chart shows manufacturing has actually been slowing in the U.S. for the past 18 months. Not great news. On positives, we heard that people in New York City, Boston, and Chicago have said there is new construction all over the cities, which this chart supports, and is helping steel and copper use. Lastly, U.S. home sales were up 14.5% in 2015, the highest since 2007. With that, we hope all have a safe and profitable week. My name is Greg Brown.